Got an M1 finance pie that's looking a little lopsided? Ever wondered how to keep your perfect blend of investments perfect, even as some rocket and others stall? That's what we're diving into today, the essential rebalancing strategies for your M1 pies over time. The Rebalancing Balancing Act. When you set up an M1 pie, you pick target percentages, maybe 60% stocks, 40% bonds. That's your ideal mix. But the market has other plans. Over months or years, strong performers grow bigger than their target, and weaker ones shrink. This drift changes your risk profile. Suddenly, that 60-40 pie might be 70-30ths, making it riskier than you intended. Rebalancing is simply the act of bringing those actual weights back in line with your targets. It's a crucial, often overlooked, part of long-term investing success. In M1, you have two primary ways to do this, and they work a little differently than in a traditional brokerage. Strategy 1: Automatic rebalancing with deposits. The easiest and most common way to rebalance in M1 is by simply making new deposits. M1's genius is in its dynamic, cash flow-based rebalancing. When you add new money, M1 doesn't just spread it evenly. It intelligently directs that cash only to the slices that are currently underweight, the ones that have fallen behind their target. Say your growth slice is supposed to be 50% but has drifted down to 45%. When you deposit $100, M1 might automatically assign $70 of it to the growth slice and the rest to other underperforming slices. This is a hands-off, tax-efficient way to rebalance because you're using new money instead of selling appreciated assets. For most investors, especially those making regular contributions, this is the ideal set-it-and-forget-it strategy. Strategy 2: The rebalance button. Sometimes, you need a full reset. Maybe you haven't deposited new money in a year, or one asset has absolutely exploded and is now severely overweight. That's when you hit the rebalance button. Clicking this button on your pie triggers a sale of all overweight slices and a purchase of all underweight slices until every single slice is exactly at its target percentage. Now, a big caution: this action involves selling assets that have gains, which may trigger capital gains taxes in a taxable brokerage account. You should only use the rebalance button when the portfolio drift is significant and you're prepared for the potential tax implications, or if the account is tax advantaged, like an IRA, where capital gains aren't an immediate concern. When to rebalance? Timing your move. Should you rebalance monthly, yearly, or when you feel like it? The consensus is threshold-based rebalancing is best. Instead of a strict calendar, rebalance only when a slice drifts by a certain percentage, typically 5% or more from its target weight. For example, if your 10% slice hits 15% or 5%, it's time to act. For most M1 users, though, a time-based rebalance once or twice a year, combined with the continuous rebalancing of regular deposits, is more than sufficient and keeps things simple. Don't overthink it. The core is sticking to your targets, not chasing perfection. Rebalancing is the maintenance crew for your long-term wealth-building machine. It ensures you maintain the risk level you decided on day one, prevents any one investment from dominating your returns, and keeps your investing discipline sharp. With that said, thanks for watching and until next time.